Welcome back. Let's talk about KRBL. The company is on our radar on the back of their fourth quarter numbers. We have the management joining in. They've seen a profit growth year on year, and we have the exports that grew a lot more. Ashish Jain, who's the CFO, joins in to discuss these numbers. Thanks a lot, Ashish, for joining in. Always a pleasure speaking with you. Now, let's talk about the exports part of your business. The fourth quarter, they contributed about a third of your overall revenues. They've seen an increase. I'm not sure how much of that is on account of increase in realizations and how much of that is on account of your own, product mix doing a lot better there. On that account itself, if you could give us a sense on what the FY26 looks like for you, for both domestic and exports in particular, and what kind of prognosis that you have when it comes to growth.
Thank you, and happy to be here. As far as exports is concerned, our Q4 really had two underlying trends. One is in terms of our key markets for branded exports, as we mentioned earlier, we were facing some distribution challenges. We had mentioned that we will use the last financial year to address those. So I think that process has begun. And what you are seeing on the branded side is an outcome of that, where our volumes in some of the key markets have picked up. The second side of the export business is the private label business. Now, that was slow for us in FY24. We had again mentioned at the beginning of FY25 that that's going to fare better. So that's also stepped up. So both these things combined have led to the growth. As far as the domestic business is concerned, our volume growth on the branded basmati side is in line with what the category growth is during the year. However, over the last 1 year, we've seen, impact on the rice prices. Broadly speaking, rice prices have been down about 20 to 25% year on year. And as we compete with the loose and the unorganized sector, that's impacted our realizations as well. So on domestic side, while the volume is in line with category growth, it's really the realization impact coming through, leading to a low single-digit growth.
All right.
As far as FY26 is concerned, we see the trend on exports continuing and in fact strengthening. On the domestic side, our current view is that the prices have settled down. So the realization, which was the key factor for the business in FY25, should help us to enable better growth next year.
All right. Hi, Mr. Jain. Good to see you, Ben. Nigel on this side. So good to hear that you expect realizations to move up from here on. Give us a few more details, though. Saudi as a percentage of your business, how big is it? And also, I think the distribution challenges were in Saudi, right, which you were looking to iron out in the next 3 to 4, in the next few quarters. Could you clarify on that?
So we don't give out country level details, but Saudi is a top export destination for basmati from India, and so is it for us. In terms of our performance in this market, I think we are still doing a fraction of the volumes that we did earlier, but it's been picking up. Sorry, what was the second question, Nigel?
The distribution, there were some distribution challenges even in Saudi, right?
That's right. So that was the main market where we had distribution challenges, and we've been able to address those. At least the process has started.
All right. And in the next couple of quarters, you're hoping to iron out things?
Yes.
So how long before you go back to historical volumes in Saudi?
See, it's a consumer-based business. So, in terms of getting back to earlier levels, it's difficult to predict a timeline. But what I can say at this point is that the process has started.
Okay. All right. What about your market share? If you could tell us, what is your market share in general trade, modern trade, as well as e-commerce? What is it currently, according to your analysis? And do you see scope for you to go ahead and grab a higher market share?
Yeah. So, if you look at the domestic market, which I guess is what you're referring to,
Yes.
FY25, I think we've recorded gains across the channels, and we've reported exact market shares in our investor deck. But across channels, we've been reporting gains. And I think we are fairly positive that we'll continue to build on that in the current year as well.
When we speak about your business, it's largely rice, but over the last few years, you've been moving into non-rice as well. You had a target of 10% revenue coming in from non-rice products or value-added products as well, as it were. Where does that number stand at? What is the growth here likely to be?
Yeah, so I think you're right. What we'd mentioned is that over the next, I would say broadly 3 to 4 years, we wanted that number to be around 10% of our overall revenue. I think we're headed in the right direction, although the number currently is small. So we've taken a couple of steps. One is that we have, for the last 2 years, we've been focusing on the non-basmati market. We believe that that's a very large opportunity in India. We did about 220 odd crores in FY24. The FY25, we did about 190 crores in that business. We are recalibrating that business, for focusing on the varieties that offer large potential along with margins. So that is underway right now. Q3, Q4 is when we've kind of recalibrated it. So you should see that business growing back. In terms of other areas that we're focusing on, recently we got into healthy edible oil segment. We believe that both our brand as well as the supply chain that we have lends itself very well to the healthy oil opportunity, and that kind of fits in with our portfolio. So I think we are in line in terms of what we committed earlier in terms of non-rice revenue.
6,000 crores by FY26 in terms of a revenue, above 6,000 crores, is that possible? And exports contributing what, 1,800 crores over what, 1,350 crores that you did last year, is that possible?
That's what we are aspiring for.
All right, and margins?
Should be an improvement over the current year.
By how much?
We don't give out guidance, but I think a Q4 is a good indicator.
And I think you said that realizations have improved. As on date, what is the realization, uptake that you've seen, say, today in comparison to the average you've seen the last couple of quarters? How much higher is it?
Yeah, Nigel, I would just clarify. So I think what we are seeing is that the realizations are finally stabilized. Against year-on-year drops, in fact, continuing till the early months of Q4, we are now seeing that they've stabilized. And our view right now is that they should remain at this level for the rest of the year.
Okay, all right. Stabilize, then revive, and then thrive. I guess that should be the way you're looking at it. Thanks a lot, Mr. Jain, for joining in and filling us in with all of those details. Wishing you all the best for the remainder of this year. But for the time being, the street likes your Q4 numbers as well as the outlook ahead. Stock up close to around 5%.